Good morning everyone and welcome back to Morning Markets from True Potential. This morning I'll be reflecting on stock market performance over the past 24 hours and some of the key drivers. Then I'll be touching on the FOMC minutes and some of the important economic data which was released yesterday. In equity markets, the UK, the FTSE 100 was down marginally 0.2%, whilst the FTSE 250 was a little bit stronger, up 0.6%. We had some weakness over in the US. The S&P 500 was down minus 1.1% and the Nasdaq down 0.9%. Europe was marginally up 0.1%, whilst overnight Japanese equities were weaker, down 1.1%. European equities across the board were mainly positive, with Italy and Spain doing well. However, we saw overall global equity returns more muted, with investor sentiment more cautious over the last couple of days, with some concerns over the pace of global economic growth, with the Delta variant flaring up in some places. It's only natural for investor sentiment to take a pause. Over the course of the pandemic, we've seen sentiment frequently ebb and flow in line with the severity of the COVID environment. On the economic data front, it was a relatively quiet day. We had more inflation data after Jeff discussed the UK inflation data in yesterday's morning markets. We had European inflation data for July, which rose to 2.2% year on year, after a 1.9% rise in June, its highest rate in nearly 3 years and above the ECB's target of 2%. We saw price increases in a number of areas, specifically in services, food and energy. Whilst a relatively quiet day on the economic data front, the most important event was the release of the FOMC minutes from July's Federal Reserve meeting. Important because investors were wanting clues as to when, how and to what degree the Federal Reserve may scale back the pace of asset purchases, meaning reducing the amount of liquidity they're going to pump into the financial system. The minutes revealed that while no firm decisions were made, most participants judged that it could be appropriate to start reducing the pace of asset purchases this year. Most members have seen evidence of the substantial further progress criterion as satisfied with respect to the price stability goal and close to being satisfied with respect to the maximum employment goal. Last month we saw good progress in the employment data, where we saw 943,000 jobs added in July. A final decision will not be made, however, until the September Federal Reserve meeting, and we'll have to see similar improvements on the job front, but also in regards to the COVID outlook. The committee members didn't come to any firm decisions on the pace or composition of tapering, but most officials are in favour of reducing the Fed's 40 billion monthly mortgage-backed securities purchases and 80 billion monthly treasury purchases at the same rate. In terms of interest rates, the minutes were clear in that the pace of asset purchases does not necessarily mean the Fed will bring forward the start date of raising interest rates. In bond markets, we saw bond yields relatively flat in the UK, but in the US, bond yields actually came in a bit following the weakness in global equities. So the US 10-year government bond yield came in 3 basis points, now trading at 1.24%, and the 30-year also came in 3 basis points, trading at 1.88%. We saw a little bit of weakness in commodities, specifically in oil, down 2.2%, and gold was off a little bit, down 0.6% over the day. In currencies, we saw a bit of strength in the US dollar, which you would expect. We saw sterling weaken slightly against the dollar, down 0.3%, trading at 137 against the dollar, and relatively flat against the euro. So the pound against the euro is trading at 1.17. A fairly quiet today in terms of economic calendar. In terms of what we'll be watching out for, well, we'll get the weekly US initial jobless claims data to get another reading on the US labour market, and some leading economic indicators from the US, specifically the Philadelphia Fed Index. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.